Before you begin watching the Predicting Price series, I highly suggest you to first watch the model series and the trade breakdowns released. The reason why is because during this lecture series, I am speaking to someone who has already gone through those lectures, and therefore I anticipate the viewer to have a certain level of understanding algorithmic price delivery already. If you do not follow this guideline, do not be surprised if you do not understand the basics of everything that I will share. Enjoy this lecture series. Hello there. Welcome to the third lecture of the Predicting Price series. During this lecture, I will be discussing daily profiles. If you did not watch the previous two lectures of this series yet on monthly and weekly profiles, I highly suggest you to watch them in the first place. If you do not follow this structure, you are not going to find the most benefit from this lecture. Let us take a look at the table of contents for this lecture. First of all, we will be taking a look at aligning the daily delivery within larger time cycles. Secondly, we will be paying attention to the daily sequence. Thirdly, we will be paying attention to some schematics. And finally, we'll be looking at some daily examples. Aligning daily delivery within larger time cycles. You might be looking at this header and you might be like, what does this mean? Let me explain. First of all, you need to ask yourself the following question. What is the monthly profile suggesting? Is the monthly profile suggesting that we should go higher for the month? Or is it suggesting that we should go lower for the month? Secondly, you should be asking yourself, what is the weekly profile suggesting? Again, is the weekly profile suggesting to us that we should go higher for the week? Or is the weekly profile suggesting to us that we should go lower for the week? We want to align our anticipated daily delivery profile with the larger time cycles. What that means is that if we are bullish on the monthly and weekly profile, we ideally also want to be bullish on the daily delivery profile. If we see that we are bearish for the upcoming day, whilst the monthly and weekly profile are suggesting higher prices, that means that we need to be very cautious going into the trading day, and it means that the shorts which we might take need to be short-lived. And I know that's a funny wordplay, but what that means is that we cannot be in the positions for too long. Meaning, we need to target the nearest time-based liquidity pool and then be content with that, since we are trading against the higher time frame order flow. If we are, however, bearish on the monthly and weekly profile, ideally we want to see that the daily delivery profile is suggesting lower prices as well. If we are, however, anticipating higher prices for the daily delivery profile, whilst we are bearish on those higher time frame profiles, that means that we again need to be cautious when it comes to for long setups. I'm not saying that there won't be any long setups, because there will be. However, it just means that you need to be in and out of the marketplace. You cannot hold on to positions for too long. If the weekly profile is suggesting higher prices, we want to see the daily profile confirm this, for example. The daily sequence looks like the following. Asia sets the stage for London, meaning how Asia delivers has a great deal of impact on how London is likely going to deliver. What I want you to understand is that this schematic right here, which you can see on the bottom of my screen, is representing 3 time cycles. These 3 time cycles have arrows within them. Each time cycle has an impact on how the next time cycle is likely going to deliver. Meaning, this cycle, the first cycle, determines how the second cycle is likely going to deliver. So if you want to physically represent this sentence, it would mean, this is the Asia session, this is the London session. London sets the stage for the morning session, meaning how London delivers has a great impact on how the morning session is likely going to deliver. If we would then, again, place in this schematic these sentences so far, you would see Asia right here, London, New York morning. Don't worry, I will show to you soon all the schematics which I use on a day-by-day basis. The morning session then sets the stage for the afternoon session. What I want you to take away from this slide is the following. What I want you to take away from this slide is that the first session is always determining how the second session is going to deliver. Meaning, we always anticipate how the next session is going to deliver based on how the current session is delivering. If we would, for example, look at an example of the daily sequence, it could look like the following. Where we see that during the Asia session, accumulation is taking place. During the London session, manipulation is taking place. And then during the morning session, we can see distribution taking place. This is AMD through the lens of Asia till New York morning session. However, what I want you to understand is that for the majority of you, you're probably looking at the schematic and you're not too sure of how to implement this within your day-to-day analysis. What I will do now is I will rephrase AMD, meaning I will use different words to represent accumulation, manipulation, and distribution. What you can see is that Asia consolidates, London expands, and the New York morning session reverses. This is an example of one daily sequence from Asia to the New York morning session. Meaning, what I want you to see is that instead of using the words accumulation, manipulation, and distribution, I'm using the words consolidation, expansion, and reversal. If you would pay attention to some examples then of what this would look like the following. What I want you to see is that Asia consolidated right here after we saw the market run up higher throughout the second half of Wednesday. What I want you to see is that when we then open up the new day right here, the market began to slowly grind towards the downside. You can see that during the London session, the market is slowly drawing lower. New York morning opens up, and what do we see? We see it open up, drop lower, forming the low of day, and then begins to reverse to draw towards the upside, targeting buy-side liquidity resting above the London high and the Asia high. This right here is exactly what you just saw within that schematic, where you can see that Asia was consolidating, London was expanding lower, and even though you might be looking at this and you might be thinking to yourself, this is not a real expansion, right? Surely you can see that this is just a consolidation taking place. There's a lot of back and forth going. But what I mean by expansion is that London is going lower, meaning you can see that London is drawing towards sell-side liquidity whilst the underlying order flow is bullish. Therefore, what New York will do is that it will seek to open up, go lower, taking out the London low before reversing and drawing towards the real drawing liquidity, which is above market price. So therefore, you need to understand that what matters is what the direction was of the previous session, or if there was no direction at all. If we pay attention to the next example, then what I want you to see is the following. I want you to see that throughout Thursday, the market expanded towards the upside, then began to retrace. Asia came along and the market began to consolidate. Notice how we were just going back and forth. London opens up, and what does London do? It initially runs higher, forms the high of London, and then begins to draw towards the downside. New York morning session opens up, and what does it do? It opens up, runs lower, taking out the London low and the Asia low, then begins to run towards the upside. And here's something interesting occurs. Notice that we initially run against the London sellers, meaning during this leg towards the downside throughout London, sellers have been profitable. Buy-side liquidity has been engineered. We initially draw lower, taking out sell-side liquidity resting below the Asia low. Then we draw towards buy-side liquidity, which got engineered during that drop lower. And by taking out that buy-side liquidity, we then see the market eventually turn around to draw towards newly created sell-side liquidity. Therefore, there were multiple opportunities on this day. Initially, you could have looked for longs after the Asia low was taken out right here. And secondly, you could have looked for shorts once the London high and even the previous day high were taken out at the right time. So what I want you to see is that we first run sell side, then we run buy side, and then we run sell side again. What I want you to see is that on this Wednesday, we saw Tuesday's Asia session initially expand towards the downside before consolidating right here. London comes along, and London immediately begins to run towards the downside after having formed the high of the session right here. We see the market then begin to run towards the downside, and something interesting is occurring. We see the morning session form a low right here, and it reverses on that London expansion towards the downside. Why does this occur? Because we reached a higher time frame POI at the right time, and it's Wednesday, meaning we're forming the low of week on Wednesday during the morning session inside of this area. We see the market then begin to expand towards the upside, and it draws towards that London high. If we pay attention to another example then, what I want you to see is the following. What I want you to see is that the Asia session right here expanded towards the upside and then began consolidating. London comes along and we initially run lower, forming the low of London. Notice that there were relatively close. We begin to reprice towards the upside. This run higher is the beginning of manipulation taking place. New York AM comes along and we initially open up, run higher, taking out the Asia high right here. And we then see the market form the high of day before rolling over, drawing towards the downside. Meaning we take out buy side liquidity and we then revert towards sell side liquidity next. Meaning we reversed on that underlying order flow which got established during both the Asia as the London session. Sell side liquidity is resting below that London low and secondly below that Asia low. If we pay attention to the second example then of the daily sequence, it could look like the following. Where we see that Asia consolidates, London expands, and AM continues. So instead of the morning session reversing on the London trend, you can see that the morning session continues the London trend. This occurs when there's a higher time frame drawing liquidity, which IBDA is in a rush to reach. If we pay attention to this example right here, what I want to see is that during the Asia session, the market ran lower and we saw it just go back and forth eventually near the latter part of the Asia session. New day opens up and also a new week, and the market begins to reprice towards the upside. It begins to run higher, as you can see. London expands higher and the New York morning session does the following. It opens up, drops lower, forming the low of the New York morning session before expanding higher, which was the real underlying order flow as was already established during the London session. Asia just went back and forth, establishing a range. London expanded above the Asia high. We see the Asia high functioning as support on price. Pay attention to this high right here, and the market begins to expand towards the upside. Beautiful example of a continuation model being in play. And what I want you to understand, guys, is that if we are anticipating that the underlying order flow will be bullish for the day, we can anticipate that instead of New York reversing on the London trend, it's likely going to continue the London expansion if it took place into our anticipated direction. If we pay attention to the second example of this model then, what I want you to see is that during the Asia session, we didn't really see a consolidation, but we saw the market expand towards the downside, as you can see. Asia opens up, runs higher before distributing lower quickly and aggressively right here. London comes along, and what does London do? London begins to run higher, and then the New York morning session comes. New York morning session takes out the London low, but what occurs? Instead of the market continuing lower then, we see the market take out that London low and then continue the order flow which got established during that London session, where we initially ran higher, engineering buy side liquidity. We then take out sell side liquidity, forming the low of the morning session before expanding towards the upside. Remember what I'm outlining to you here. We initially run higher, then we run lower, taking out sell side liquidity, which got engineered during that run higher, and then we run towards buy side liquidity, engineered by that run lower. And I know that for the people that are still watching this lecture, even though I've warned them to not watch this lecture right away, if you did not watch the prior lectures, you're probably getting a headache right now because you're not understanding what I'm describing to you. However, if you have been following along in the structure that I told you to watch this lecture series, you are smiling right now because you are seeing a beautiful algorithmic signature right here based on time-based liquidity, where you can see that we take out the London low during the morning session and then we revert towards the London high, but also towards the Asia high. Because think about the following. Who is making money all throughout this leg towards the downside, which began during Asia? Shorts, of course. Therefore, buy side liquidity is resting above this high, which we are likely going to draw towards when the time is right. Anticipating the New York morning delivery. First of all, you need to ask yourself the following question. What is the higher time frame order flow telling to me? Are we likely going to expand or are we likely going to consolidate today and more specifically during this morning session? Secondly, the question you must ask yourself is the following. How did Asia and London deliver? Where are their respective highs and lows? Above the highs, buy side liquidity is resting, and below the lows, sell side liquidity is resting. If bullish, we anticipate a run on the Asia or London low, followed by repricing higher. If bearish, anticipate a run on Asia or London high followed by repricing lower. Since you have been part of my mentorship for a while, you of course know I really like to use these if this, then that statements. By utilizing if this, then that statements, you are able to objectify your analysis significantly. And objectifying your own analysis is something you should put a lot of emphasis on. Therefore, I highly suggest you to follow along with this, if this, and that statement as I just outlined it to you. The third daily sequence which we will take a look at is the following. Here we can see that the Asia and or London session accumulated. The AM session then manipulated and the PM session then distributed. What I want you to see is that we're constantly referring to AMD fractals within the anticipated delivery profiles. What this would look like if we would rephrase this, it would look like the following. Where we can see that Asia and or London consolidates, AM expands, and PM reverses against the direction of the AM session. What this looks like in the charts looks like the following. What I want you to see is that the Asia session on this day consolidated and then the London session came along. During the London session, we ran up higher, taking out the Asia high, and then we began expanding towards the downside. The New York morning session begins and we opened up, reprice lower. Then we have one push higher, creating the high of the morning session before rolling over significantly. We see the market then begin to expand towards the downside during the beginning part of the afternoon session, during the lunch cycle as I refer to it, and we then see the market reach a higher time frame key level before turning around and reversing. What I want you to understand, guys, is the following. Even though you do not see the AM high taken out, this is still a PM reversal profile. The reason why is because to me, a reversal takes place when we change from sell program to buy program. This doesn't mean we immediately have to draw towards the opposing side of the range for it to be a reversal. No, because inside of this buy side delivery from this row formation right here, you can still see lower time frame market maker buy model opportunities, where we initially saw a sell program followed by a market maker buy model by a buy program, of course. And that is very important to understand, guys. If we pay attention to a second example, then it would look like the following. Where I can see that the Asia session consolidated right here, and London then slowly began to gravitate towards the downside, but it also kind of consolidated. The New York morning session comes along, and we initially see the market reprice towards the upside, taking out the London high and barely taking out the Asia high. When these buy-side liquidity push get taken out, we then see the market run towards the downside. It reprices towards the downside into this BC right here. Market forms a low there and then continues to expand higher, drawing towards the morning session high. But here's something very important occurs. Notice that we engineer relative vehicle highs right here near the end of the morning session. The PM session opens up and we initially reprice above those relative vehicle highs, taking them out. We then see the market form a high and begin to draw towards the downside. Notice that we have changed from buy program to sell program, meaning this is again an example in which we do not draw towards the opposing side of the range, but we still see that change from buy program to sell program, providing lower time frame market maker sell model opportunities. If we pay attention then to the fourth example of the daily sequence, it looks like the following. Where you can see that Asia and or London consolidated, the morning session expands, and the afternoon session continued the morning session trend. Meaning instead of reversing on the morning session trend, you can see that the afternoon session actually continued that underlying order flow. This occurs when the morning session or the lunch cycle stops right in advance of a higher time frame drawing liquidity. And that is something which I want you to investigate. The reason why I'm putting this type of information, which is crucial information, near the end or in the middle of my lectures, is so that the lazy people do not understand it fully. And you need to put in the work, and that's probably why my mentorship is not favored by a lot of people. But I don't care, because I'm trying to help you as best as possible. And in order for you to get to this level, you need to put in the work and you need to investigate, because I'm literally handing out to you the keys that you can use for yourself. If we pay attention then to what we're seeing here on this chart is the following. You can see that during the Asia session, the market consolidated right here. We then see the London session begin to expand towards the upside. The New York morning session expands towards the upside as well. You see a beautiful repricing higher taking place. The afternoon session comes strong and we initially retrace into an imbalance which formed during the morning session, and the market begins to expand towards the upside, drawing towards the buy side liquidity, resting above this morning session's high and above this lunch cycle high. If you pay attention to a second example, you can see that Asia delivered right here. Initially ran lower before slowly expanding towards the upside. London consolidated, and then the New York morning session began to reprice higher quickly, as you can see. We see the afternoon session then begin to consolidate for a while before expanding higher significantly and drawing towards the higher time frame, drawing liquidity. What I want you to understand, guys, is that in order for you to look at the afternoon session, you must understand what is the drawing liquidity for the day and where did AM stop. If AM stopped in advance of the drawing liquidity, we anticipate that this is engineered liquidity, which we can anticipate PM to draw towards. Anticipating the New York afternoon delivery. You need to ask yourself the following question. What is the higher time frame order flow telling me? Are we likely going to expand or are we likely going to consolidate? It's the same question which I proposed to you during the morning session. Secondly, we ask ourselves, how did AM and the lunch deliver? Where are their highs and lows? If we are bullish going into the afternoon session, we anticipate a run on the morning session or lunch low, followed by repricing higher. If we are bearish, we anticipate a run on the AM or lunch high, followed by repricing lower. We will expand on these specific daily profile models during the next lecture on session profiles. During this lecture, I will touch on 90 and 30-minute cycles to share with you how we can anticipate how, for example, the morning or afternoon session is likely going to deliver throughout the session. Meaning, how can we position ourselves long near the low of that morning session, or how can we position ourselves short near the high of the afternoon session? This is what we will discuss during the next lecture. I hope that you enjoyed this lecture. I hope that you learned a lot from it. I look forward to catching up with you in the next one. Be safe.